And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the NQ for Tuesday, April 27th, 2021. The markets did again perform pretty much according to the analysis that we laid out last night. And starting here with the NQ, we've now, or actually not us, it's the market that now needs to make a decision as to what today's Globex high at 14,050 is actually going to be the completion point for the C wave, and then in turn, the minute B wave within an ongoing minor fourth wave correction. This has been up in the air now for quite several days. And we reached that. The market then pulled back, pulled into a nice start of a nice corrective phase, which could be that C wave down, and then kind of got to a low about 13,913, 914, and then just kind of waffled around for the balance of the day. That's not to be unexpected either, because we had some big boys in the tech industry reporting their earnings today. We had Google report earnings, and the stock then reacted by adding 100 points to its tally, while Microsoft also reported, and I didn't notice that yesterday when I was saying who's reporting. Microsoft also reported today, and they did not really impress the market with their earnings, and it must have been the guidance because they did beat the estimates. So the fact that Microsoft went down at one point $10, now it closed in an area of about down $8 from its close, $9 from its close. And that offset Google's $100 gain to its closing price. So with that happening, you're going to see that we basically just kind of flipped higher and then flipped lower and then kind of just stayed within that very tight post-market range. Now, here's what can happen, and that's going to give us a whole lot more information to go on, and the possibility that indeed we are going to come down and finish this minor wave 4 before all is said and done and we start heading toward the moon. What's going to go against that? Well, tomorrow we have Facebook, and we have Amazon, and then we also have Apple out there, and these all have yet to report, and I'm sure that some are going to blow the doors off, and maybe one or two are not going to blow the doors off. So we still have to leave open the possibility that we're not going to get very far. In fact, the market may slip down again and get to a new low below this 13,912.50, which is what we saw this morning, and put in 5 waves down. Now that 5 waves down is going to be more significant because it could be wave 1 of C. And then we're going to be able to get ourselves back down to these levels. Now, again, structured against what we've done, it's actually more than likely going to end up being an A, B, C flat correction. And that pretty much is as the A wave came down, the B wave basically retraced almost all of the A wave back up. So the C wave would be expected to pretty much just retrace again all of that B wave, maybe a bit more. And what we have here, the Fibonacci indication, is that wave C, if indeed that's what's in play, is going to be equal in length to wave A, which is a very common relationship between an A and a C wave at 13,693. So that's basically just about 7 points below the low of wave A, and that would fit perfectly, clean it up, put a nice C wave, put a 4 there, and then set the stage for this nice rally that we are anticipating. Could that do the whole thing tomorrow? Yeah, it could. It really could. But we got to wait and see what the market wants to do, what the market wants to tell us, and what is going to happen. So here's how I'm going to leave this. If we get an additional low early or over in Globex below 13,912 to put in that 5 waves down, it's going to set the stage for a small wave 2. So it's 2 of C bounce. Now, you could run some quick Fibonacci's from that high at 14,050 down to this low to see, or wherever the new low would come in. And that's going to then give you the levels for the wave 2. More important, what's now going to be more important is that the C wave, excuse me, the third wave, 3 of C, should really begin to bring this thing down. And then a 4 and then a 5. And that could happen all very quickly. It could certainly unfold in the next day or two. And so who knows? We got the earnings reports for tomorrow. We have Amazon is actually on Thursday, and Apple is tomorrow. Got that backwards. Apple is tomorrow, Amazon on Thursday, Facebook is tomorrow. So we got Facebook and Apple tomorrow. 2 big, capable of blowing the doors off or imploding, on earnings. And possibly that's what's going to happen. And that may drive this market down, but it may wait until after the market closes. Since they report after the market close, that's when all the fireworks are going to happen. So maybe in the build up to it, we might come down and then we rally. So there's all kinds of things that can happen. And we now have to allow the market to tell us and not try to second guess what these earnings are going to be. We have no idea. And if you do, because you got an inside connection, good for you. But I don't, and therefore I cannot specifically say where this market is going to go. So we give estimates. We put up Fibonacci retracement levels that could fit. Again, I'll just demonstrate this, like putting up the Fibonacci retracements for the minor wave 4 continues to build right here. But here we have another one. Very small, but we have another one right around that 100%. So we got 3714 down to 13,693. All very clean, very nice. And then breaks below that, should somebody really disappoint, then we've got this down here, this zone. So it basically is 13,557 all the way down to 13,442. Although I hate to say it, but I would expect 13,473 to kind of contain any overflow and set the stage for the next rally. If, and again, we're going to have to observe the market. If and when it were to drop like that, what is behind it and what's going on, because it could be very, very powerful and drive right through there, and then we're into a whole different picture. So for tomorrow, what I'd like to see is a slight new low below 13,009. What did I say? 12. Maybe down to 13,880. That would be nice. We got 871, 872 support Fibonacci, and then we've got the 50-day moving, 200-day moving average here right now at 13,881. And so that continues to be a nice zone to for this completion of this 5 waves, if indeed it's going to end up being 5 waves. If the market goes back up and zips above 14,016, all bets are off. And this ends up being a 3-wave structure down, and we're off to the races again. So that's our scenario for tomorrow. We have some very strong possibilities that we are, in fact, going to come down in a C wave. But should the market go back up, break back above 14,016, did I say? Yeah. That would then, this could not be wave 4, because that would break where wave 1 came in. And that would tell us that this is a complete three-way ABC down, and this was 1, 2, and then we're going to blast. So that would be upside. Downside, we make a slight, we make an additional new low, let's just say a new low below that 13,912. And then we rally in a wave 2. And then that sets the stage for the next, the third wave down. And we would expect some fireworks within that third wave. And that would be up C. So those are our two scenarios. That's the preferred and an alternate. And they each have equal weighting at this point, simply because we continue to roll on earnings reports. And so continue to trade along with your moving averages. And I just want to show you very quickly on the intraday charts how, well, you can't see it because now, but all of the, in this morning's decline, all of the moving averages, remember yesterday we were saying if they're all lined up to go up, that would be that the 50 is above the 200, the 20 is above the 50, and the 8 is above the 20. In the reverse is when it's going to move lower and you get the same setup. You get the same alignment of your moving averages where the 50 is below the 200, the 20 is below the 50, and the 8 is below the 20. That occurred this morning as these things were flying lower. That is when you just go with it and you follow your moving averages as it moves down. So you try to always have at least a contract in the market as this thing is dropping. And conversely, from yesterday when it was going up, you would always try to have one in the market. So you're going to take one off as it pulls back, and from wherever you got off, you get back in. Or you always have two contracts, sell one, get one back on, sell it, get one, sell it, et cetera, as this thing moves through that particular wave. And in this case, it was down. It was extremely profitable. And basically, to be honest with you, it was the move where you needed to make your money today, because from that point, the market got choppy. And unless you're real good at trading chop, it's not fun. It's not fun. It can be very limited. The moves can be very sudden. You could be, waiting for a long to pop and it doesn't, and it goes down and you get stopped out, and then you go short and then it goes up and you get stopped out. Trading chop is not fun. So you need to be able to take advantage of when the market is putting in a move and being able to make your money, because that may be the opportunity that you get for that day, as was the case today. That's where I'm going to leave it. Our next update will be tomorrow, April 28th.